Good morning, everyone, and welcome to the Quantum Leap pre-market session for February 1st, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. This is a subscription service. We do these live pre-market trade plan setups, and then we do live trading and analysis during the course of the trading day. Before we get started, please read through the disclaimer. Nobody here at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you do want to come in and check us out, send me an email at quantumleapfutures@gmail.com. or give me a call, 647-545-8065. You will need Skype, so send me a Skype contact at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And of course, if you like what I do here, please follow me on Twitter, and there's probably over 300 of these pre-market sessions on YouTube. Just do a search under Quantum Leap Futures or Quantum Leap Trading. Okay, so Friday. Friday was the last day of the month. We had hit critical mass. We were anticipating that the bears could get aggressive. Our main hypothesis was actually to come down into this lower distribution, take out the overnight low, test the value area low, and then work our way up in the afternoon towards that main target that we had up at the 15. Sometimes the market doesn't do what you want it to do, and they basically took it right from the get-go. We actually had a little bit of an open rejection reverse off of the prior day range and value area, and then they just ripped it and went up and tested the key line in the sand. Now, we did say that if we got above 1900, that you would not want to short this. And if we got above the key line in the sand, that we probably end up with a trend day and a test to test the daily range and the weekly range that were still within target. And we actually went up and tested the key line in the sand above us. I don't know why my targets got taken down at 15, but you guys all know that we were looking for that 15, 16 area. We had the naked close, we had the naked VPOC, we had the former microcomposite VPOC, and we were actually targeting the 1375 right in front of this 14. You can go check the video out. It's up on YouTube. But anyway, they got into a trend day. I nearly got my face peeled, on the tick gap. I closed it down, reversed it at 1901.50, and then I rode it up. I just didn't ride it long enough, and then it was tough after that, because if you didn't get in on the initial, it was hard to find a spot to get back into the trend. I found a couple spots, and then we took a few shorts trying to see if we were going to get a counter rotation, but you can see the counter rotations were very short. Taking a look at Friday's COT report. This is the red is the ES. Let me just bring this down so you can see this better. There's your legend. The zero line's right here. You've got retail, which is your yellow, and then the light blue or whatever color it is, I'm colorblind, and the dark color down here, that's your large spec, or your commercials and your large spec. And you can see that both commercial and large spec are net short, and that the retail is net long. So smart money is still net short. The commercial came up, and a couple Fridays ago, well, a few weeks ago, but they've been slowly getting net short. Large spec, less net short, but still there. So, retail could be holding the bag if we get a flush of any kind into the February Just going over to there's a lot of stuff to go through on these daily reports. We're just starting them up again. We had stopped doing them for a while, but the QLTP is printed each morning. Has your news, has your ladder above the previous day close, ladder below the previous day close, and then all the levels. And what you're doing, the way to use this is you're looking for confluence. And as soon as we get all the numbers settled, and I'll be putting my trade areas and my targets in as well. But you'll see where different methodologies and different numbers will give you confluence areas, and these are the areas that you want to pay attention to. And then there's a little worksheet area here just so you can keep track of some of the key observations. Then you've got your Pearson pivots on the daily, weekly, and monthly, and then your key numbers on your opens, highs, and lows. It's a guide sheet for the main part to tell you where other traders might be taking a look at where they might get long or short and what they might be targeting. Just close that down. News for the day. We didn't have bad news. Everything came out pretty good, but the big one is, of course, is going to be the ISM manufacturing. Before that, at 9:30, right on the open, we have the RBC manufacturing PMI, and then we have the final manufacturing PMI at 9:45 for the US, and then we have the ISM manufacturing. This will be the big one. Of course, we've got construction spending and ISM manufacturing prices. And then at 11 o'clock, we've got ECB Draghi speaking, so that can move the market as well. And then at 1 o'clock, we've got FOMC Fisher speaking. So we've got a lot of news today. So and it's the first day of the month. There's going to be a lot of positioning. Just be careful. Earnings, for the most part, there was no great surprises on any of the majors. We do have some more guidance downgrades. So earnings, we've still got 41 after the market, and this week is still fairly busy with earnings. Of course, I always like to start my day off with a basic candlestick chart. Just going to move this up. And I like to start with the monthly. And basically, I'm looking for trends. I use a 9 EMA, 20 SMA, and candlestick. I'm looking for slope and separation for the strength of the trend, where the trend is getting violated. You can see on the monthly we have violated the trend, and we have a possible start of a downward trend. Although we do have a possible foo-bar, Mr. Sneaky, on the monthly that could give us a move back up towards the moving averages, but right now the trend is down on the monthly. On the weekly, let me just get rid of this. On the weekly, we've been talking about this technical gap. They're coming up to close the gap. A gap close will bring us up into the 1949. We do have a naked cross on the weekly up here in 2008. We do have the possibility that we could continue to rally up there, but there is some weakness coming into this market. So just be careful and know that we could flush at any time, so keep your wrist tight. On the daily, we've had this downward trend, and the last week they've been trying to violate it. Friday they did, so now we're back above the 9 and the 20, and we're testing the 20 right now. Could probably get a MA squeeze, MA hug down here. A move down to the 9 right now would take us down into the 1900 to test that. So the trend was down, but we are violating it to the upside. Now on the 4-hour, we've been watching this head and shoulder pattern that's got a measured move up into the 1960, 62, 63 area. There's the left shoulder, there's the head, there's the right shoulder. We've broken the neckline, which was basically at 1902, 1903 area. So we do have the measured move still in play for a move up into that 1960 area as the main target. And then the 100% target takes us up into the 2002 area. The trend is up on the 4-hour, although we did get a Mr. Sneaky and a tech gap, and we're coming back and closing the tech gap. We've lost a little bit of slope, but we still have separation, so they could bounce here and continue. But I would be watching for first key the 1350, which is our low overnight, as a clue to whether or not they try to violate the trend on the 4-hour. On the 1-hour, we have rolled over. We had a beautiful upward trend. Globex on Friday RTH, and so far Sunday night, but they had a technical gap and rolled it over, and now we are below the 9 and the 20 and possible start of a downward trend on the 1-hour. On the 30-minute, you can see that the trend is accelerating. We've got slope and separation, so we are coming into this market with some weakness. I am expecting a little bit of a pullback this morning. I'll show you where to. And then going down to the 15-minute, there is a naked cross down here, by the way, at 1896 on the 30-minute. On the 15-minute, there's one down here as well at the 94.86. You can see that the 15-minute has got a stronger trend down. We tried to violate it. They could not hold above the 9 and the 20, and they broke below, and we're getting continuation right now on the 15-minute. And then on the 5-minute, you see we're getting some consolidation here, and we're crossing above and below the 9 and the 20 here, so we have some indecision. We did close. We had a naked cross here, but immediately came back and closed it. There is another naked cross over here, I believe. No, I thought there was. It obviously got taken out. So not a lot of naked crosses to guide us in terms of the moving averages. Okay, going to the big picture. So obviously, we are in this area right here, and we accepted value around 1890. Just before we broke out, we accepted value here at 85. We break out, we go up into our main target, which was in the 15 to 16 level, and then we got the trend day, and we tested right to the other side of the balance and right to our key line in the sand. Our key line in the sand was 32.75. Our high was 33. Our overnight high was 32.50. So, we've come up and tested this area, but I said on Friday that there's a lot of undetermined fair value in this area. I think we're in February, at least the first week of February, we're going to get stuck in this distribution zone between 32.75 and 9.75, or between 9.75 and 81.75. I think they're going to test both sides of this. Undetermined fair value at 27.25, 20, and 15.50. Key line in the sand for us today is going to be the 9.75. The warning line is going to be this 18. It's actually going to be 17.50. I'll show you why. And then the warning line to the upside, 22.50, and then the key line in the sand above is going to be the 32.75, which will essentially be the 33 and a breakout of Friday's high for a move up to 35 and a test of the 41.50 value area high. We're inside of this prior micro-composite. I'll fix it later. I want to change my colors here. The value area high is 41.50. The value area is low is 1901, and that's where we're trading inside of this right here. Balance is at 1650. I call it anywhere from 1550 to 1650. So if we break below 975, this is why the key line in the sand is here, is it brings us into the balance area that we just tested or just broke out of with the range high at 1910. and likely to bring us down into the 905. I've got a target at 907 as well, but likely come down and test the lower side of this value, okay, and the upper side of this value from the value area, the microcomposite that we just broke out of, which is down here at 98. So this 901 to 908 area is likely to get tested if we break below the 1909.75 and they don't bounce in the 5 or 7 range. I'd be looking for a bigger move down. If we can get and hold above the 17 and accept this value right here at 1650, they're likely to come up and test the 22 area, okay, and test the overnight high and possibly break out and continue with price discovery up. So that's what I'm looking at in the big picture. Let's take a look at overnight. Our week open, our Globex open, and our month open is 1929.75. Mark that down in your journal. Below 1929.75, we are in a bear month. Above it, we are in a bullish month. It's going to be a key defining line in terms of whether or not we go and continue price discovery up. Of course, our overnight high is 32.50. Right at our value area high and just below our range high. Overnight low is 1375. Just above the floor pivot and just below the VWAP. We are got 25 minutes. If we come up into this 20 area, we could get a VPOC shift, but right now our Globex VPOC is 1550. And we have basically a double distribution, the upper distribution being much more flat and less defined than our lower distribution. We could get a VPOC shift here too to 18. Let me know if we do while I'm talking. We have a LVN right here at 1950. So I'm going to pay attention to that 20 area, because if we get above that 1950 and break above the 20, then I think we'll go up and test the range high. Our daily ATR target up is not at 24.25. I haven't moved that. So our low off the Globex right now is 13, or sorry, is it 1275? 1375. Our daily ATR is running 49.65. So our upside ATR daily target is all the way at 63.40. So you can see we have range capabilities. $63.50, and then our daily ATR target off of the high overnight, which was the 32.50 minus the 49.65 daily ATR, brings us down into the 1883. And we've got a cluster down here of a naked VPOC, the daily ATR down range, and the 1881. So that's all the information I really need out of this, unless we get the VPOC shift. So right now, if we open in this area, we are going to open right at the warning line. And they seem to be going up and through it the last little while. So I'm probably going to shift this down, and we've got the value area, or sorry, the VWAP from Friday at 16 with an LVN with this little distribution right where they found the overnight low. So I'm going to use the 16 area as a trade area to come down and take out the overnight low. If we get below there, I'd be looking for them to come down. If they do it before the RTH open, I'm looking for them to expand the overnight low. And then below it, we have this 1150 area. So the target below 16 is into the overnight VPOC, of course, at 1550 if it doesn't shift, but the overnight low and the floor pivot. So we've got lots of, we've got a target here. You get to see this little HVN, at the, at the middle of this little distribution zone, and then you've got the midpoint there as well. So I think that's a pretty good short right there. Above there, I'd be looking up to the 18.25 as your first target. And then the trade level, 20. And if we get above the 20, I'd be targeting this 22 area. You want to get in and get funded before 22.50. And then above there, I'd really be looking for the 26. You can use the 27.25, but I'd be using this this HVN. There's a lot of repair to do in this profile. So you're probably asking yourself, you're not paying attention to all the LVNs. Well, I'm not paying attention because they don't mean as much, because there's not a lot of price acceptance between them. And then above there, obviously, the target would be the gap fill. 29.25 is the month open. Sorry, 29.75 is month open. And then we have the value area high and the overnight high and the range high. And anything above the 33, I'd be targeting a move up into 35. That'll be our main target above range and above value at 35.25. And then the rest of our targets above all remain the same. 39 resistance could come in at 41, but basically the 33 is going to be a key line in the sand for us. So I think if we get above Friday, that they're going to get continuation. So this is going to be our key line in the sand above. What news is coming out in 5 minutes? I don't have that. Marvin, if you just quickly mic up and tell me. And then all our targets above are all going to be the same. 44, target at 47.25. 53.
So it's 6:45. I'm sorry, Eastern. My time 6:45, 9:45 Eastern.
Okay.
Sorry. PMI.
Yeah. I didn't think there was news coming out. I just didn't want to get caught flat-footed. Then below the 1911.50, we've got the value area low at 8, and we've got our key line in the sand, okay, at 975. So that's going to straddle that area. And I can't expand this, but you don't want to be long until you're above the 975. You might even wait for the 10. You don't want to be short until you're below the 8. But this is going to be our key line in the sand below. And with that, I'd be looking, we're already, at that point in time, we're already below the Globex low, and we're out now below value, and we're back inside of the prior micro composite balance area, and I'd be targeting our change percentage of range target is 0.7. I would make that your first target, and then a return to the scene of the crime. There is another target I would put at 0.6. It was that 0.6, 0.7 area I was talking about. which was where the VPOC was most of the day until they stole it into the close with the volume coming in to close out the longs. And then below there, you've got the return to the scene of the crime, FOMC number. And then, of course, just below that, you've got the 03. It is 0375. And then, you've got this little area right here. But I really be looking at, do they hold 1900? And I don't think they will if they get down there. And I would be targeting that 97.75. And then below that, a test of the range. Remember, the range high from Thursday was up here at 96, and the value area is right here at 91. So I'd be looking for them. I don't think 93.25 is going to be much for us. I think they'll come down, test the value area. And then anything inside of Thursday's range, we got a lot of repair work to be done. Remember, this has got to be expanded down too, by the way, to 90, because that is our VPOC, that microcomposite VPOC. That's a 9-day microcomposite VPOC. And below that, the 2-day just before we accepted value was Thursday VPOC down at 85. Below 90, I think this is a really, really good target down here. And there's a lot of repair work to be done. And then below that, we've got the 76, 77 area, which is the value area low, a trip through value. And then the next key line in the sand is that 70.25. It's now shifted to 70. And then below that, our weekly ATR downside target is all the way down here at 1857.75. I don't think we have to worry about that today. Right now, with today, I think they're going to do a lot of repair work. Like I said, either in between the 1909.75 and the 32.75, or if we get below the 1909, between 1909 and the 91.25 area. Possibly even a little dip down there. I don't think we're going to go down that low, but you never know. You have to be prepared for everything. So that is going to complete our levels for the day. We are above the Keltner center line at 1675. We're coming up, to this 1820 level. The VWAP overnight is up at 22. If we get above the 1920, look for them to push through to test the 22 level and test the upper Keltner line, which is right there. A break below the Keltner center line takes us back down towards that VPOC, which is at 1550 if it doesn't shift beforehand, and the 11.25 area, which is the lower Keltner right now. So that's going to complete ES. Let's take a quick look at gold. I don't know why I keep losing my profile on my gold chart. Gold has broken out of this microcomposite balance area, which we had the VPOC at 1102 area. They continue to hold above the range high at 13 area. Balance is still at the 16. We're chopping around there. If we hold above the 13 or even dip down to the 12 or the 11.6 area and hold, look for them to move back towards the 16. If they get above the 19 today, I'd be looking for some continuation, up towards the 26, and then 29, of course, is going to be the breakout and the continuation of this, what I anticipate to be a long grind up in 2016, up into the 1200 area. So look for them to continue to, stair step this up as we grind our way up. If we get below the 1100, Then I think we got to come all the way back down to the 1172, and if we don't hold that area, the key area to hold right now is down here in the 1060. If we don't hold the 1060, it's all over for gold. It's going to come down a lot further. My next big target's all the way down at 1000. So, but right now it seems to be holding fairly well after the breakout, and I'm expecting continuation. So that's going to complete the pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.